Dare I say it, but has the market overreacted to Tesla's recent earnings data? Hi again, everyone. I hope you're all doing really well. Now, as a long-time holder of Tesla stock, although admittedly I did sell part of my position last year, however, I was pleasantly surprised by the recent results that Tesla, ticker symbol TSLA, produced last week. However, I am also a little bit cautious with regard to how the stock price has reacted so far. So this video is going to be a bit of a discussion of the proverbial grain of salt that I'm taking these earnings data with. Not that I'm anti-Tesla, but I just believe there needs to be some balance in these discussions. There's a bit to talk about, so let's get straight into it. So, as many of you know, Tesla recently released its latest quarterly earnings report and the market responded positively. The stock has risen quite significantly this week in trade following the reporting of this data. This may seem like a sign that Tesla has fully broken free of its slump and is on its way to even higher prices, but I would caution against jumping to that conclusion just yet anyway. While the numbers themselves were positive, with revenue coming in at around $24.3 billion, up 37% year over year, and earnings per share slightly above Wall Street consensus estimates, it's important to remember that these numbers were also the result of analysts walking back their expectations throughout the quarter. In fact, compared to prior years' quarter, gross margins fell by 360 basis points. Furthermore, it's worth noting that the recent boost in demand may only be temporary in response to the massive vehicle price cuts implemented by Tesla this month. On the fence, buyers may be deciding en masse to take the plunge now. However, a few months from now, this buzz surrounding the price cuts will likely have faded and the company could again find itself dealing with softening demand, the reason why it slashed its prices in the first place. Additionally, rising competition remains a serious threat to the future performance of the stock. As more and more companies enter the electric vehicle market, it will become increasingly difficult for Tesla to maintain its market share, and with sales growth during 2023 potentially failing to outweigh the impact of lower vehicle prices on margins, Tesla's profitability could in fact decline. All of this is not to say that Tesla is not a great company or that the stock won't continue to rise in the short term, but it's important to remember that these are the risks involved and the stock is currently priced for perfection at 49.5 times its earnings. If the company fails to meet expectations in the future, the stock could pull back severely. So while the market may be excited about Tesla's latest earnings report, it's important to take a closer look at the numbers and consider the potential risks before making any decisions about investing in the stock. It's always wise to tread carefully when it comes to investing, and this is especially true when it comes to a stock like Tesla. And on that note, let's delve a little deeper into the details of Tesla's fourth quarter earnings report and what it means for the company's share price. So the electric vehicle giant reported revenue of $24.3 billion for the quarter, which was, like I said earlier, 37% increase from the previous year, which massively exceeded analyst expectations and was a significant contributing factor to the post-earnings rally for Tesla stock. In fact, it's probably the main contributor. Additionally, non-GAAP earnings came in at $1.19 per share, beating Wall Street consensus estimates by 6 cents per share. This is a strong indicator of the company's financial performance and was also a major factor in the stock's upward movement, although it is worth remembering that these numbers were brought back during the quarter. However, it's important to note that while the numbers look promising, there are also some concerns to consider. For example, gross margins, like I said before, fell by around 360 basis points compared to the prior year's quarter. And while CEO Elon Musk made optimistic statements about current vehicle demand, it remains to be seen if this boost in demand will be sustained in the long term. Furthermore, rising competition and margin compression are ongoing threats to the future performance of the stock. While the post-earnings surge in Tesla stock may continue in the short term, it's important to keep these risks in mind when evaluating the company's overall outlook. Overall, while the company's latest earnings report shows some positive indicators for Tesla, it's important to take a closer look at the details and consider the potential challenges ahead before making any investment decisions. Anyway, things are still looking good for Tesla, but I still believe that there are some challenges facing the company. What are your thoughts on Tesla's earnings? Do you think these market-beating good times are going to last, or are you a little more pessimistic? How do you think Tesla is going to deal with the increasing competition they face in the EV space? Let me know your thoughts in the comments below. Till next time, everyone, may the markets trade in your favor. Cheers.